Good afternoon, traders. This is Kevin Craney with RJO Futures with an afternoon financial market update. Cash markets trading higher. The S&P trading up higher to 1372 on the day, up about 9 points on the day. The Nasdaq up 32 at 2,942. We'll continue to get earnings that come in. Earnings coming in a little disappointing this quarter thus far, and guidance certainly hasn't been anything to really write home about. But we continue to see this disparity between the equity markets and the interest rate markets. We saw interest rate markets really hover right around where they were yesterday, with the cash yield on 10 years at 149 basis points and the cash yield on 30 years actually coming in right at 259 basis points. I think what we see is a little bit of divergence on what the equity markets are really rallying on, and one can argue that what they're rallying on really is not good news, because it is more hope for additional quantitative easing. We saw Fed Chief Ben Bernanke back in front of Congress today in the House testifying, again with much the similar language as yesterday, only with some different questions, more colorful questions, if you will. But certainly, of all things pointing to, he still has bullets in the chamber, and if things get worse, he's willing to use those bullets, but not giving any real definitive answers there. So really, I think the equity side is rallying on the hope that we continue to get additional quantitative easing, because the data that we continue to points to an economy that's really in a downward trend and flat on its back in terms of growth. We see the 10-year and the 30-year futures on the interest rate side that are trading right now right at the lower end of a range that they've been in for a couple of weeks. A very tight range at that, but holding support very well, even in the face of equity markets that have rallied really nice here over the past 2 to 3 days. So we look at data coming in tomorrow. We'll get existing home sales, see if we can repeat the pattern of good housing data that's been coming out of the United States, the one bright point here and all the macroeconomic points. Likewise, we'll get a Philly Fed survey, and we'll get leading economic indicators, as well as a weekly jobless claims. Those are things that the markets will be looking at here in the U.S. just for a little bit of further guidance on what direction the economy is headed, and if any additional QE is coming. Across the ocean, we have bond sales coming out of Spain and France tomorrow. So that certainly is something that will be watched, particularly that Spanish bond auction, to see how it goes off and at what yield that Spanish bond auction actually goes off. I think that's probably going to be the most important thing. We saw Spanish bonds up today at about 687 basis points, up about 16 basis points, and right at about 605 basis points on Italian. So those are still lofty levels, and certainly Europe is what we have to pay attention to day after day, as it's certainly being driven off of headlines from there. We haven't seen any in a while, but it's certainly still a volatile environment over there and can cause our markets to correct at any point in time, giving further support to interest rates. Please give me a call at 888-596-5817. We can discuss these opportunities and others. As always, remember, futures trading is not for everyone, and it does carry a high degree of risk.